for our tea break a while ago, I did encourage you to download the caseway file that we've been using in level 2. So if you've got that open, that's fantastic. If you don't have it open, you can follow on my screen. I am going to be clicking, I'm going to be typing, things like that. But you can follow along and see. And then if you are following along and redoing it in your file as well, you'll have a good idea of what the file would look like then. So currently, if we were going to have a look at some of the work programs that we are going to complete today, there'll actually be nothing in there at the moment. Or it might just be halfway completed, or halfway, not completed, but only half of the procedures that we ultimately want in there will be there. So, of course, the challenge with the probe methodology in terms of ISA 315 revised is that when that new template was launched, effectively, you don't have anything in your work programs until you've done the planning. And that's the practically, from an operational perspective, that's been a problem. So, of course, we always encourage delegates and firms to prepare, to have planning time before the fieldwork starts, and more so to actually have maybe, let's say, a junior person, a first year or so, to help you with the planning, especially if we think about system descriptions and documenting the types and volumes of transactions, because there is a lot more work required for planning the engagement before you can have those work programs to use and to complete during the fieldwork. All right, so in terms of the slides, that one was really just to start the slides off. So what I want us to just have a look at, and I'm just going to show you this one slide, and then we're going to go to the product. It's really just a reminder of the document flow for today specifically. So, of course, I'm not looking at all the other documents. But for today, what we're going to look at, and what we haven't really dealt with in a lot of detail, or we have dealt with in some detail, but we could look at it in more detail today for our relevant sections for today's. We'll start in types and volumes of transactions 1051, which is part of our gathering understanding documents, but it is the one where we actually go into the account balances, the classes of transactions. Then from there, we're going to go to the risk assessment documents for assertion level. And there we've got that interaction. You'll see my pink arrows going up and down between 1150 and 1160. So information system and control activities. So those two direct control categories of internal control, which we consider at assertion level, and then, of course, the risk assessment documentation at assertion level. From there, we will go to the audit plan and strategy, and we will go and have a look at the work programs from there. But those are really the documents. Even if you wanted to jot down these 4 numbers, those are the 4 that we're going to work through for the rest of today's session. Right, so I'm going to go then to my caseway file. Again, I know it's very small. I'm not able to increase the size of my document manager, but right at the top, you might notice it says Wrap Up Manufacturing Year in 2023 Level 2 Delegates files. I'm using exactly the same file that you would have downloaded from the Success community. It is the same file that I've used for all the sessions. So yes, if you maybe don't have something switched on, which I do have switched on, the only what can I say? The only scenario or thing that I can imagine that would be the difference between my file and yours is probably because I have already completed it in other sessions, in the earlier sessions. Good. So in our document then, we are in the caseway file. You've got the documentation, and I'm going to scroll up to 1051. So that's, of course, under our engagement working papers, the pre-engagement planning documents, and I want us to think and look at types and volumes of transactions. Maybe just quickly before we go there, we'd spoken about the 3 points or the 3 hurdles for related parties and the risk assigned for related parties. In Probe, let's call it the switches that you will switch on to have that activated will be in 1050 gathering information. So I'm just quickly going to show you where that is in 1050. 1050 being gathering information, and as you can see, I moved there this morning in preparation for today's session. So this question, in my case now, it's question 31. So question 31 in my file, if you were to open your file in for an engagement, another engagement for a client or something, this could be 32, somewhere around there. So depending on what your answers were for your rest of your engagement, maybe it was a new audit, maybe it was the first time you auditing it, things like that, could change the number of questions that you have in the file. So don't just go and look for question 31, but the question that says were transactions with related parties significant. In fact, it's the one before that, sorry. Did the entity enter into any transactions with related parties? Now, if I had said no, that would have been the end of it, and we would have had no other considerations. But I'm saying, hang on, we did actually, yes, we did have transactions with related parties, and I'm already prompted them to go and document who are those related parties in 1120. Then the next question, were those transactions with related parties significant? And I would probably go and document or consider documenting something there in the description, not necessarily at this point, because we did then say, are these significant transactions with related parties outside the normal course of business? And our conclusion in this case is to say, no, and we documented to say the most significant transaction for wrap-up manufacturing was the rental paid to the property company Wrap-Up Manufacturing Properties. So that is not outside the normal course of business, because the property company, it was quite normal for them to rent, so that's perfectly fine, no issues there, and therefore we said no. If I had said yes, let's say this was outside the normal course of business, what you would then see is that then there is that prompt from ISO 550 paragraph 18 that says it requires you that a significant related party transaction outside the normal course of business must be treated as a significant risk. Click on the record button to record a risk. Okay, so that's what you would have done in that case. We, however, said this is perhaps a significant transaction, but it's not outside the normal course of business. And that's why we did not treat that as a significant risk in this case. All right. That's that then. Then let's go back to our document manager, and we have a look at 1051. So again, we have already done quite a number of the other planning already, so I'm not going to repeat much of the other ones, but 1051 is then the next document for us to consider in today's session. Right, 1051, types and volumes of transactions. A reminder then that right at the top, you'll see that we, oh my goodness, yes, we chose to have the documentation of whether we're going to do the document then at least, the types of procedures that we performed as part of risk assessment procedures for each of the sections. So you'll see every time I go to a section, then underneath each of those, we have the procedures documented. The alternative in your firm setup would have been to have it only right at the top of the document, so even above property, plant, and equipment. I would have then documented it once off, and that would have been applicable then. My response at the top would have been applicable to all the sections in here. So you can imagine, especially when you get to 1051, where there are so many sections, that's probably why users were asking, but hang on, I don't want to document this every time. Can I just document it at the top? Okay. Right, the sections that we are looking at then, first of all, is revenue for today. So in the revenue section, what are we seeing? We are seeing the link to the lead schedule. So if you wanted to open the lead schedule, you could have done that. What we are also seeing here now, and we also saw it last week, is that in our file, we had set up the file to say we want to do the analytical review procedures in 1051, this document, and we do not want to do the detailed or predictive analytical reviews in 1052. Right, in I think our second session, we showed you what it looks like in 1052, but for the rest of the engagement, we're showing you what it looks like when you do it in 1051. So that's why this is then my input field or my input cell, and my engagement team has documented to say revenue is more or less in line with the prior year. A small decrease has been noted, caused by a small volume decrease, which arose from machinery challenges during the year. You'll remember that our machinery broke more often than what we had planned for. We had increased repairs and maintenance, which led to some risks recorded for property, plant, and equipment. So that then also explains or correlates with what we had said, that because the machines weren't working, we couldn't sell as much as we could in the previous year. Then we have the types of procedures that's documented. And what we then have is identifying the possible risks of material misstatement. So in here, those are the procedures that we need to document as risk assessment procedures. Again, I'll mention, some of you might remember this perhaps as being step 1 in work programs, especially if maybe we have some audit managers here, someone like that who used to audit on it already before 315 revised was applicable. Otherwise, if you've only ever seen it here, this is the place where it is. It's its home. A unique scenario here per section. So for revenue, for example, we'll have the calculate the gross profit percentage per category of revenue to obtain reasons for fluctuation. So that's obviously something that's unique to revenue, which you won't expect to see in every single other account. When we then get to the transactions and balances, as you know now already, this is where very often we document then things that are unique to the section, where we also activate certain relevant parts to the work procedures if there is an assertion linked to it later on. So in terms of categories of revenue, you could have documented it there, but we also then ticked that we have a sale of goods. We don't have any of the others, but you could have also, as we saw in the combined session earlier, where we said maybe my interest received is my revenue, or my dividends received, things like that is my revenue. But in our case, we only have sale of goods and that's it, right? If you did have more than one revenue stream, you could have then also indicated what the estimated value of those separate transactions were, which could help you in identifying risks or recording risks in certain cases. Then next up, where does the sales transaction originate from? And this is important because the work program procedures will actually point you, when it wants to refer to the source document later on, this is where it's going to come and say, what did the team say is the source document? And it's going to literally just take this one. So if I pick a delivery note as the source document where the transaction originates from, it's going to say select delivery notes, right? So if I see something strange in that procedure that wants to select from the source documents, it's not because there's a bug in the software or anything funny. It's really just because perhaps I selected the wrong thing here. So come back, have a look at what you selected, and that would quite possibly fix the work program steps. If it is something other than this, we've got time records here, which you didn't always used to be there. But let's say it's it's maybe a job card or something like that for a service organization. You could always just select the other, and then please, if it says other specify, then put there job card, right? Because otherwise it's not gonna, it's literally gonna say select from other specify, blah, 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 blah. So you want to actually then have the opportunity to document the relevant one here. Okay, I'm gonna delete it now because of course we are gonna work with delivery notes. So you can see now that my prompt is also gone, but that's fine. We know what it's for, and we want delivery notes to appear. Then you can, if it is relevant, to say that this client also has accounting estimates, including fair value estimates. So if that is the case, that could also appear. All right, now I need to actually show you something which I remember now that I forgot to open my second caseware file. So what I'm quickly going to do is I've got a screenshot of this, and maybe that's even better to just show you the screenshot. So trust me, if you think this is a bit funny or it's not possible, no, how can this be? In an IFRS file, come on, man, let me just full screen mode. Right, so what I can show you here is that if this was an IFRS file, so again, we'll have categories, we can tick sale of goods, all of those items are in here. But there's a very important question in the IFRS file because we've got IFRS 5. Not IFRS 5. Because of IFRS 15, the revenue standard. There is this specific question here, the question 5, that asks you to provide a description of the agreement between the entity and the customer. And then it says, for example, a contract or an equivalent. So this is a term. This is not a paragraph that you need to write. You need to just include a term, like it says contract, things like that. Because what happens here is that if I type something like what you can see in yellow here, where I said the description you type in here shows in other places, including question or point 6, the very next point, read the sentence carefully. So whatever I document there or type or describe, that part literally goes again forward in the rest of my document. So if I leave that whole part that I've documented there and I go look at point 6 says type of performance obligations provided in the term, the contract, the whatnots, and business practices. But now I've documented a whole long sentence. So now it's going to read type of performance obligations provided in the description you type in here shows in other places, including point 6, the next point. Read the sentence carefully and business practices. Okay, can you see that looks silly? Right. So this is in IFRS 15 or the IFRS engagement file, and you may or may not be aware that IFRS for SME is also picking up those obligations. So in time to come, the SME file will have something similar. But for now, that is an important point, and it's very similar to the point that I've made about the source document that we need to pick. All right, so that's just what I wanted to point out in terms of our IFRS file. But the SME file, the engagement file that we are currently working in, does not have that obligation, that performance obligation. Now, I've probably moved away from revenue. Our engagement does not have that requirement, but it is still applicable in terms of the source document where it originates from. All right, if I needed to document any other items, I could have documented them in there as well. I do have the prompts. Right, so that's that. And then having then considered 1051, the next thing that we can do, and you might remember that from the slides as well, if I just show you the slides, we went 1051, and then we can either go 1150 or 1160. So for today, I'm going to show you 1160 first, but please remember the arrows. Once you've been in the one, you have to go to the other one. So I know of, or I'm aware of firms where in their firm they say, well, you know what, we're going to document system descriptions for a certain number or certain type of accounts in any case, or for all accounts, whatever the case may be. The standard does not require you to record system descriptions for all of those, and there are only certain cases where you have to document the system description and the control activities even. But for the sake of now, just so we don't have to jump back and forth all the time, we are going to start in 1160 and then go and see what happens in 1150. Right, so let's go and have a look then at 1160. For revenue. All right, so risk at assertion level, and in my document map, I'm going to jump to revenue. By default, because revenue has your rebuttable fraud risk, you already have 3 lines with this rebuttable or presumed fraud risk in here. You can try to delete them, but unfortunately they do come back. So don't worry about the others if they are still there. Focus on either recording one or properly rebutting the risk completely away. So in other words, documenting why there is no risk of material misstatement for any of the assertions, and then you are good to go. Right. In our consideration, we need to document a fraud risk. We, unfortunately, for wrap-up manufacturing, were not able to rebut the risk, and so we are going to now record a risk. We're going to, in any other case where you have to record a risk, you probably go and document your, let me show you your risk button, go and record a risk and start. But of course, in revenue, we already have these risks. So we're simply going to right-click and select Edit Risk. Right, so click Edit Risk for me. In theory, you could pick any of those risks. I'm just picking the first one because that's going to look neatest or tidiest. So go and record or select Edit Risk. We're not deleting the risk. It's going to come back anyway because it keeps on reminding you to record the risk. So select Edit Risk, and that will then take you to the risk dialog. Right. I always like to think of those yellow lines to say, please give me some love and attention. Don't just carry on. Don't just run ahead. I need you to please read this and not carry on. So what does the yellow line say? It says, warning, warning, risk record mode is now active. Click here to exit risk record mode. Now, we want to record. We want to edit the risk now. So please don't click there to exit risk record mode. But if you did not intend to be in risk record mode, that's where you're going to click and you're going to exit. Right. So we are going to now record our fraud risk, which we need to record as a result of the presumed fraud risk. In our scenario, we have an occurrence risk, and the occurrence risk, oh man, my tongue tie there. We have an occurrence risk, and the occurrence risk that we've identified says that the client can manipulate revenue recognition through early recording. Sorry, not through early recording, that's our second risk, but firstly, the directors may wish to overstate revenue to reflect better results due to covenants and performance incentives by possibly recording revenue that has not occurred. Right, so occurrence is our risk. So the source, I always like to keep the source for the fraud risk the same. If you do override it, it actually, it takes away that paragraph. And I mean, really, we are recording this because of that paragraph reference. So I like to keep it there. Then in my input field for description of risk, I will go and type some stuff. So you can, if you want to, actually go to this little line right at the top and actually just start typing there. So I'm literally now going to type for us to say the directors may wish to overstate. And if you want to type as well, please type with me, do it with me. The directors may wish to overstate revenue to reflect better results due to the covenants and performance incentives by possibly recording revenue that has not occurred. Okay, so it's not a cutoff issue that we are recording at this point in time. We are recording an occurrence issue. Good. Sections. Now, the other cool thing about Probe is that I can actually record a risk that will link more than one section. In our case, we're just going to link revenue, okay, because we don't want to make it too difficult for today. But let's say, for example, you are recording a risk that affects both property, plant, and equipment and depreciation, or that affects both the taxes and another section. You can actually record the risk once, and that risk will then appear on both sections. So it is saving you time. In olden days, I almost want to say we had to record the same risk twice, one in each of the sections. So I don't need to do that anymore. I've got revenue. I'm going to minimize the sections part so that we can see everything of the risk dialog on one screen. It just makes it nicer. But now you know the sections are there. I've selected revenue. What are the inherent risk factors? Well, in this case, it is a fraud risk factor that I've identified. I'm going to pick fraud risk factor. And what you will notice is the moment I said, well, this is a fraud risk factor, what happens? Well, then a significant risk is ticked. Fraud risk is always a significant risk. So if you ticked fraud risk factors, you will always have significant risk ticked. And we'll see just now how we're going to respond to that. Right, the implication, the guidance that's provided to you in the default or in the skeleton says that if this presumed risk is not applicable to a particular revenue stream, rebut the presumed risk and document your reasons for rebuttal. When you conclude it is the fraud risk related to revenue is not applicable to the class of transaction, rebut the presumed risk on 1160, document your reasons here. We're not rebutting, we are actually recording the risk. So that was just guidance for us. We need to delete that. And we are going to actually document the implication in the implication cell. So what is the implication? Well, revenue could be overstated. That's as simple as that. Right? What is the assertion? Well, we've already said revenue maybe didn't occur. So we're going to select EO, which is the occurrence assertion for us. And then we're going to do the risk assessment. So we consider what we know about the client, etc. And we are going to then say, what is the likelihood that this could occur? Maybe we say likely. Okay, it's almost like a medium risk thing, you see. And then monetary impact, what would be the impact of that? Well, we're saying for them to do it, they're probably going to do it. I almost want to say properly, so it's probably going to be a likely monetary impact. What I see now is I have a resulting inherent risk based on the inherent risk, the spectrum of inherent risk. I have a high risk. It's also possible that I might have said, I don't know, let's say the monetary impact may have been medium. And then the inherent risk result would also be medium. But because I said there is a fraud risk factor present, there is a significant risk. So yes, it is important to do the risk assessment. I'm not saying it's not important. But what I want to just say is that the fact that I've marked it as a fraud risk factor will make it a significant risk. Right. Which means that for a significant risk, I will always have a specific audit procedure. So the inherent risk, the assessed inherent risk that goes into my ROM calculation, that is high, but I will always have a response, a specific audit procedure step in my work program to specifically respond to the risk that I've identified, this fraud risk. So again, I'm going to go into my formula bar, and I'm going to type the responses. Now, I'm going to type the responses, and then I'm going to talk about it. But let's see what I've selected to do. I'm going to select all material and a sample of revenue transactions from the general ledger and trace them through to the delivery note. So that's my source document and the production records. Okay. Then step 2. A, agree the details per the general ledger to the invoice, delivery note, and production records. So that's my step. So we want to confirm that for a selection of the revenue that was recorded, did they occur? How will we know if they occurred? We will see an invoice. well, I can manipulate that. We will see a delivery note, and we will see that those items have in fact been manufactured by looking at the production records. So then I can confirm the items were produced, they were sold and sent to the client, actually delivered to the client and invoiced, and therefore the sale took place, because that fits into our sales terms, and when the rights and rewards, or the risks and rewards rather, transfers. So what I want to just mention about this is that you'll see I've mentioned select material and a sample, and you're saying, but hang on, how's that different to required procedure and the sample procedure? Yes, I agree. The required procedure would also have said select a material, and the sampling procedure would have said select a sample and perform da-da-da-da-da. So a specific audit procedure for a significant risk does not always have to be more, and it doesn't always have to be very different to what you would have done. What the standard does say is that risk requires special audit consideration. So it could be a combination of saying, I'm going to do something different and do more of it. I'm going to do something different but not more. Or I'm going to do more but not necessarily something different I would have done otherwise. Okay. Also, what I've sometimes thought of is very often we'll say, but I'm not doing anything different this year than I did last year. Well, probably because last year you also identified this as a fraud risk. So I almost ask myself, what am I doing differently for this balance than I would have done for any other balance? In other words, that doesn't have a fraud risk. Or if the client really didn't have a fraud risk, what would I have done differently? So that's where sometimes almost want to say the penny then drops to say, oh, actually I'm doing something more, something differently to what I would have done had this not been a fraud risk. The fact that the procedure might also be recorded or visible under the required procedures does not mean that I cannot record it as a specific audit response, because the standard just says I have to respond to address the significant risk specifically. Right. You will see that we did not tick, and we are not going to tick, the non-substantive procedures required. That is where we say we must test controls when substantive procedures alone will not provide us with sufficient appropriate audit evidence. We did not identify that to be the scenario for wrap-up manufacturers, so we're not going to then go and design non-substantive procedures just because we cannot get sufficient appropriate audit evidence. That does not mean that we're not going to test controls or not identify controls. We will look at that shortly. But for the moment, that is the first risk that we've recorded. I've completed all of the fields, and I will then click submit. And now I've got to be very patient, because I'm now going to actually wait for the script to run to record this risk in the database. You can see that there's a little blue mesmerizing circle. It does take a few seconds, so we just need to be patient. All right, so there we can now see, oh, it's still running. Because I saw the information, I thought it's all done, but it's still running. Right, I'm going to talk while it's running. So we can see that, oh goodness, risks. Good. So we can see that the risk has now been recorded. We can see that my risk factors, the description, the implication has been updated. I have marked the assertion, I've done the risk assessment, and it's marked as a significant risk. We can't see the procedure right now, but that will appear in the work program, and we will go and see it there. Right. I want to record a second risk. So let's go through this again. Perhaps if you thought initially, oh, no, I'm not going to do this, I'm just going to sit back and relax. Let me challenge you. Come do it with me. Let's record a second risk. So I'm going to now go right-click, edit risk. And I am going to say the client can manipulate revenue recognition through early recording of invoices, i.e. before actual delivery has occurred. What is that? Which assertion is that? When the client early records revenue recognition, that is not recording transactions in the correct period. And that is also known as the cutoff assertion. And cutoff is part of our accuracy valuation. I'm lying, my goodness, it's our separate assertion. Apologies, I'm still back in 2019. So we've got the separate assertion cutoff, which is the assertion that's also under AVA. So we've obviously got accuracy and we've got valuation and allocation, but we also have classification under accuracy, valuation, and allocation. So don't forget about classification. But thankfully for today, we have the cutoff assertion, and that now has its own special little assertion category. I love it. It was, my day was made when I saw it. All right. So this again is a fraud risk factor because the client would be manipulating my items. Still, my sections are minimized. It's revenue, and I'm not picking anything else for this point in time. So fraud risk factors, and then the implication is again that we say revenue may be overstated. Okay, so that's the implication. I've selected cutoff. Likely to occur, let's say likely. Monetary impact, look at it, consider it, and do your assessment, which gives you the resulting inherent risk. The significant risk is already marked because we said there's a fraud risk, and now we need to document our specific response. Now, what we're going to do in the response is we're going to do a cutoff test. But for this cutoff test, we specifically want to go and consider not just, oh, let's pick the last five, first five, anything like that. It is crucial that we actually consider the time it takes from when a sale or when the items for a sale leaves the warehouse until it gets delivered at the client and ultimately then recorded. Because that is the duration of the product cycle, of the sales cycle, and that is what is going to indicate how many transactions could possibly take place in the period, and that will drive how many items I'm going to record. So it's possible that we're going to say, well, it takes about 3 days to run that transaction, and in a 3-day period we record 50 transactions, or actually in a 3-day period we record about 5 or 6 transactions. So it's not about picking the first 5, last 5, first 10, last 10, any of that. We need to consider the transaction cycle and how long that takes place, and then from that go and select the transactions for cutoff testing. All right, so we want to make sure that they did not record early. So we will go and select the last invoices for that sales transaction cycle. And in our case, that led to be 10 invoices. All right, so you've heard my sermon now. I didn't just pick the first 10, last 10. I considered the transaction cycle. So in my specific audit response, I'm going to say select the last 10 invoices for the year and trace to the signed, to the signed delivery note. Oh my goodness, my typing delivery note, to ensure that revenue is only recorded after the risks and rewards have passed. Okay, quite important here. So that is then going to be the specific procedure that we will have on our work program. Good. That's the second risk that we recorded for revenue. Click submit and moving along swiftly. You have 3 spaces available for recording the risks. So we've got that third one active there. If you have already recorded risks, then you don't have to now go and rebut the other assertions. We have applied our mind. We have considered the fraud risk included in ISO 240, and so therefore we don't have to rebut it. Okay, but if there is perhaps another revenue stream for which you want to rebut it, of course you've got the space available to rebut it for that if needed. Okay, oh my word, let's just go look at the risks again. So there are our risks. We've got the lead schedules showing the inherent risk at assertion level. You'll see that we haven't recorded any inherent risk for completeness. Existence occurrence is high because of the risk. Rights and obligations not applicable because that's not applicable to classes of transactions. There's no AVA risk. The cutoff risk is high. No PD, no presentation disclosure risk. Just as a reminder, if I had recorded more than one risk for a specific assertion, the highest assessed inherent risk would be the one that's going to flow through to the risk table. Now the question then, do you conclude that the presumed fraud risk related to revenue recognition is not applicable? So obviously we're not concluding that because we have recorded risks. So that's not the case. We're not rebutting it. But if I had to be rebutting it, I would have the opportunity to document it here. All right. Then there's the specific materiality. Perhaps we chose not to change that. And then we can document the conclusion for our response, basically just to say, well, so you can document your reasons for your risk assessment and the materiality, but in all honesty, it's actually kind of obvious. Based on the risks, the responses are there. That's the what's the word? That's what we've assessed. That's what we've determined. That is how we determine the risk. We've got a lot of detail recorded there already. Just want to see, it looks like a question's come in. No, okay, sorry, maybe I just caught it when I saw the when I saw a hand raised. All right, good. So you can document a reason here. I know some monitoring reviewers prefer to have a reason here, but really I would imagine it's definitely important to document it here when you change the specific materiality from something else to what the default performance materiality or specific materiality is. But in all other cases, if I've carefully documented what my risk assessments are, I do believe that it is all quite sufficiently clear. But otherwise, you can document something there to say, based on the risks recorded, something like that. Okay, so that's revenue, and that is in the 1160 risk assessment at assertion level. Now, next up in our document then is to go to the information system and controls. So that is the direct controls related to revenue. So let's just again consider the top here to say we considered and we said the types of risk assessment procedures. That is what we would have documented. The second question is, I almost want to say almost my sanity check, hey, where I say, do we elect to do anything more than just the bare minimum? So this tells us what is the bare minimum we have to do. We have to evaluate controls, identify and evaluate controls for controls that address significant risks. So we've got a significant risk for fraud. We have to go and identify and evaluate controls for those fraud risks for revenue. Or, and this was not the case for us, but we also have to go and identify and evaluate controls that address risks for which substantive procedures alone do not provide sufficient appropriate audit evidence. We said that's not applicable to us in revenue, so that one's not applicable. Controls over journal entries we already considered last week. And then if you want to really badly test controls, well, then you've got to go and identify and evaluate if they are sufficiently designed, sufficiently implemented. So the one that's going to catch our eye today is the first one, controls that address significant risk for revenue purposes. All right, so I'm going to skip ahead to go to revenue in my document map on the left-hand side. I'm going to get to revenue. The standard says I must provide a system description. Now, you've already got quite a long system description here. Not everything is included, so I would imagine a person is probably going to actually link an Excel worksheet here or something to have a more complete system description, or maybe you just need to add it in here for your engagement file. As you're going to see just now, when we identify a control, that's actually not in the system description. So our system description, you could see it as thinking our system description wasn't complete. The team needed to actually enhance or expand on their system description. But let's not be too hard on them for now. For the purpose of documenting and completing our items, we can still work with what we've got here. All right, so you've been prompted to document your flow of information, the processes, the policies, the accounting records, any specific accounts, etc. We've even included an example of the entry that is used to record the revenue and split the VAT out, considerations around IT, all those things. Okay. We are then asked, do you plan to test the operating effectiveness of control? Because if you are, well, then we're going to need to go and identify which controls we are going to test. We said for now, no, we're not going to do that. But even if we don't want to test controls, we must go and identify controls for the risks, for the significant risks. So guess what I'm seeing? I'm seeing those those two significant risks that we had just recorded in 1160 is now reflected here. Can you see why it's then sometimes easier to first go to 1160 and do the risk assessment and identify the significant risks? Because if I had been here and I had gone through the system description, etc., I would have possibly not seen the significant risks and skipped this part. And then when I've done the significant risk assessment, I needed to come back to 1150. So one of two things, either complete 1150, do 1160, remember to come back to 1150, or do 1160 and then remember to complete 1150. Oh, good. So what do we need to do for these controls? For for these significant risks. The directors may wish to overstate revenue. We said it has a high inherent risk. It's a significant risk, so we need to record a control. So you can then either click record control to record a new control, or we can go and look at the controls that are already recorded. There's a list of them, and these ones unfortunately relate to journal entries, things like that, so none of the controls that we need. So we are then going to have to go and record a new control. So record the control, we go into the control dialog. Again, it tells us record mode is now active, exit, click here if you want to exit. Right, so what is our control? Now, our control, I have cheated here and I've actually typed it out already, so I'm going to show it to you quickly. One, saving us some time, but also giving me time to explain it to you. So the system description didn't include this part, but in further investigation, we found that the only control that really is present there to ensure that deliveries occurred, so to address this occurrence risk that we have, is that Pumi X, the debtors clerk, she takes or follows up on any outstanding receipts. So when the debtors don't pay, she follows up on those receipts, and she will make a note of any discrepancies or queries by the debtors, which are then followed up by Andy Crack. So if the debtor says, well, I don't think we ever got those items, I don't have a delivery note or whatever the case is, that's why I didn't pay for that invoice, well, then she makes a note and lets Andy Crack know about it, and then, of course, that can be followed up. So again, the section is just revenue. I'm just going to minimize the sections. So, I mean, not the best control in the world. It's a bit of an informal one, but hey, it's better than nothing, eh? So, is the control designed effectively to address the risk of material misstatement? Will it detect and correct or prevent revenue transactions that did not occur? Yes, it will. It is designed effectively. It's not the best one in the world. It's probably not going to be the key control ever, but it is designed effectively. Then, how are we going to determine if this control was implemented? Does Pumi put a sticker, a stamp, whatever on it and say, checked, I've checked, or whatever, any of those things? No, there's none of that in the description. So obviously we're going to inquire. But if they come back and they say, no, Pumi doesn't do that, she just makes a note of any discrepancies that she finds. But if there are no discrepancies, nothing happens. Well, then we are going to have to basically come to a conclusion in terms of the implementation of this to say there's no actual evidence of the control being performed. So then perhaps something along the lines of saying, there's no evidence of the control being performed. And here again, I'm maybe cheating a little bit. I'm typing the response for you here, or just copying and pasting. But there's no evidence of the control being performed, except for the fact that there are no long outstanding debtors with queries on the account. So it indirectly looks like she has picked up anything, if there were any, because we don't have any debtors that are long outstanding and querying the items. So maybe all the sales did actually occur, did that take place. With that then, is it properly designed? Is it implemented? Can we conclude that it is implemented? Yes, the DNI is successful, so we can conclude that the control is implemented. What is the relevant assertion that's addressed? Well, that's the occurrence. And then the question to say, do you want to rely on this control? And we said we're not going to test controls here. I mean, you can't actually test it because how are you going to actually, there's no proof, there's no evidence of the control being performed. So practically, we can't actually test it. So we're going to say no. No reliance intended. We will just go and test it through substantive procedures alone. All right. So let's run that script then. And that's the thing then for revenue in 1150. There's a second control. The second risk. Second significant risk is, of course, the one for cutoff. And we need to go and see what is the control that the client has put in place for that second significant risk. You can't say, oh, I've done one control, let's move on. No. You've got to go and identify and evaluate controls over each significant risk. So let's go and have a look at that as soon as our script has finished running for this first one. Right, so we can see that the script is run. So again, it just jumps around a little bit, but let's go and look at the controls. So I've got the first one recorded. Now I need to go and select it. So it is now in my database. Now I just have to select that control. If the only control present to ensure deliveries occurred is the follow-up. Right, so that one's there and recorded. If that same control also addressed my cutoff problem, I could have literally just selected the same control and had it there. Okay, so that's the cool thing about having them all in this database. Unfortunately for us, the control does not address cutoff. So we're going to record another control for cutoff. Good. So the description of the control, still our debtors clerk. She is quite crucial in our plan here. Pumi will take all invoices in the last week of the month, document the date of delivery on an Excel sheet to calculate any possible timing differences. This schedule is reviewed by Andy Crack, who will spot check and test dates inputted by review of the underlying delivery notes and invoices. Andy Crack makes a note on which items are tested and then signs this sheet off as reviewed. He will then pass the journal for reversals for which may be necessary. Again, revenue is selected. You could pick the other assertions as well if you wanted to. And then the question, is the control designed effectively to address the risk of material misstatement? Will this ensure that there are no cutoff errors? In other words, that the revenue is not recorded past the period when they should. I believe it will. I believe it is designed effectively to prevent and or detect and correct material misstatements in cutoff. Explain how did you do or test the implementation test for this. So, of course, there's a document for us to inspect. So we're going to say, well, we inspected the Excel sheet for the month of, pick a month, and we picked September. For the month of September, which is signed off by Andy Crack as reviewed with the notes in the sheet on the items that he did review. We traced the adjustments to the journal in the revenue account, and we inspected that Andy was the one to pass the journal. You could even go a bit further to go and actually test check that from the Excel sheet and check it to the delivery notes and the invoices to see that he actually reviewed those items that he indicated has been reviewed correctly. Right. So do you believe the control is implemented? Yes, it looks like it's implemented. Assertion, relevant assertion that's selected here is, of course, cutoff. That's the one we wanted to rely on. And then the crucial thing is that we actually want to rely on this control. Yes, we want to rely on this control. We want to go and test this control. We're then going to include a description of our test of control. Now, I'm not going to document that here. Let's just say this is our work program step for the test of control. So here is where we are going to say, select a few, 2 or 5 or whatever of the months, go and reperform it, go and check that it was done correctly. That's our control test. Right. Submit that. And again, let's give a moment for the script to run. Good. So for revenue then, go and look at the controls. I've got those 2 risks. I've got those 2 controls also. So let's record the second control. Pumi X will take all invoices. Tick that one. And here we said, yes, we are going to rely on that control. Okay. Control activities, design and implementation. That's all there. We have documented my implementation. And I've said I'm going to rely on it. What I will then also see is a question to ask us whether any of these controls that we mentioned have that address the significant risks or the controls we want to rely on, whether they are dependent on IT controls in the IT environment. And this is basically saying, are there any general IT controls that you may need to go and consider? Now, in our case, these 2 examples are very manually orientated. Yes, there's an Excel sheet, but there aren't any IT applications that's really dependent on controls and things like that. So I'm going to say no in this case. I guess you could also reason and say, well, there's Excel and Andy, and how do you know it was really Andy? But it does say that Andy signs it off. So I'm assuming that he does it in Excel, prints it off, and then signs it, or signs it electronically. Well, then you're going to have to go and consider the electronic signature considerations. But for now, let's just say no, there aren't any IT controls or IT applications, and move on from there. All right, so that is then revenue, information systems, and control activities. If you think back to our slide, let me just show you the slide again. We've gone through types and volumes. We've gone through information systems and control activities. We've gone through the risk assessment. So what's left now is the audit plan and strategy. So that's 1220. Where do we find 1220? So in the planning stage, we've done the pre-engagement work. I want to just actually move down. We've done the risk assessment in 1150, 1160. Now we're going to do the audit plan and strategy, which is 1220. Right, so 1220. Open that up. Good. Oh, now it just wants to quickly refresh. So it is because we've now recorded all those other risks that it wants to now actually just push that through back to 1220. the reality is, in all likelihood, you are going to record these risks and then open up at 12:20, so you won't necessarily need to wait or to refresh, rather, like I've had to refresh now. Good. So 12:20 audit plan and strategy, it's updated and we can now work. So the overall items that have been coming through, I want us to go straight to revenue and see what we find in the revenue section. All right, so revenue, what do we find here? We almost don't have to do anything, or we don't have to do much here because it's actually already recorded. Risk of material misstatement is medium 1, medium 3, not applicable, medium 1, etc. That's now the ROM calculation. And that is a combination of whether the account is material and a lot of the risk assessment, which includes the inherent risk assessment at assertion level. So let's see, where there's no inherent risk recorded, like for presentation disclosure, we have medium 1 because it's a material balance. Where there is this high risk of material misstatement, or high inherent risk rather, for cutoff, we have medium 3. And again, none, not applicable, high for occurrence, we've got that fraud risk, and none for completeness. So the risk that I'm going to actually have as to respond to in my work program is going to be occurrence and cutoff, right? I can see my specific materiality being flowing through the desired audit risk as a reminder of what I need here in my audit plan and strategy. Again, I can see the fraud risks and all of the other risks recorded. I can see that I have specific audit procedures here. In the next part, I can then also see I've got the significant risk responses. I've got the control tests recorded, right? We can't see the actual tests, but we'll see them just now in the work program. And then I've got required procedures. On the left-hand side, we've already said we're not going to use management experts, etc. We might need to consider work performed by another practitioner. That I switched on last week, so it's just switched on. Are we going to use unpredictability in our substantive procedures for revenue? Let's not do it for today, but that is where I would switch it on. We said we're not relying on previous testing, and there's no laws and regulations relevant to revenue. What we have to switch on, though, is we're going to switch on the sampling tab. And I'll tell you why. Firstly, because we have already decided we need to do sampling as part of our overall response. And there are specific steps in the sampling section that helps me to comply with ISA 530, the sampling standard. So that's why I'm switching it on. But at the same time also, if I had considered it and I said, well, the only way I could actually get sufficient appropriate audit evidence is by doing not just required procedures, but also substantive sampling, or also extended analytical, or also extended test of detail. So this is where I would decide what is the best way in which to respond to revenue. Now, some of you may have noticed this before. There's a hyperlink to the work program. So I can go out back to my document manager, go and find the work program, etc. But in my way now, I'm looking at my audit plan and strategy. I'm saying, this is how I'm going to audit revenue. Is this appropriate? Let me see. And then I'm going to click on that hyperlink, and it's going to actually open the work program for me. And I can review it. I can edit procedures if I need to. And this is where I'm basically, when I say use the word finalize, this is where I am finalizing my work program so that it is ready for the field work to be done. Right, again, let's just give a bit of time to get it all done. I'm going to increase the size for you. This is why I opened it beforehand, so that I can increase the sizes, etc. Because I knew the work program is going to change drastically as we are recording risks, I didn't do that beforehand. All right, or I would have just had that question to say, please refresh your table. Good. So again, when the guys in the field work open up, they are going to see inherent risk, control risk, fraud risk. That's the financial statement level risks, overall materiality, performance. They're going to see these things. We are going to make the no IRs disappear soon, but for the moment, you can see where I've got the high inherent risks. Again, a reminder of the specific, the individually significant, clearly trivial amounts. All of those are pulling through. I've got my identified risks. I've got the class of transactions audit procedures, significant risk responses. So these are my procedures that I've selected, where I will perform them and then conclude whether there are any exceptions. So those are the ones. If I wanted to change them, right click. I'm not going to go enable editing. I'm going to go into the risk dialog. So then I'll probably just go back to 1220, go back to 1160, etc. Right, because this is what I'm going to do to address that risk. Again, this one at the bottom is just carrying on, carrying on, carrying on. So that's where it is. Then the next thing we have after significant risk, we also have test of controls. There's my procedure again coming through. This is our work program step for the test of controls. Remember, I typed that earlier on. That's for the cutoff assertion. And then we get to required procedures. So I can also just click through here. Significant test of controls, required procedures, substantive sampling. That's in there where you can see my paragraphs for 530, all showing as to what I need to complete. What you will also notice is that there are procedures here under the sampling section that says select a sample of revenue transactions from the general ledger and extend step 8, extend step 9, extend step this and that. So if I'm not going to do those steps, then I can actually just hide them. Right. So I can go and have a look at what is step 8 going to be under the required procedures. Let's see step 8, select material revenue transactions from the general ledger and follow through to the signed delivery notes, other appropriate source documents, etc. Hang on. We've already recorded this as the item that we're actually going to do in our significant risk response. So I could now update if I wanted to the pretty one or whatever. I can either keep it here and just reference it to the top, or I can actually go right click, ignore this procedure because I'm already doing it as part of my overall response or my significant risk response rather, and then make that item disappear. Okay, I'm going to just also hide the next one. Of course, we're actually going to follow through to the debtors account, but just for the sake of showing you how to hide it, right click, ignore this procedure, and I'll ignore it. I'm going to bring it back just now, so don't get the fright. I'm going to hide it now. I won't hide this one because it actually makes a reference to the IFRS standard, which I actually want to test, so I don't want to hide that one. But now I realize, oops, I actually hid one I wasn't intending to hide. So let me show you ignored procedures. There's the one that I did not want to hide, one of the blue ones. All the blue ones are hidden. So right click, show this procedure for me. It becomes black again, and I can then go back to show the default view, and only the one that I did intend to hide is hidden. All right, so please go and hide the procedures that are not relevant. You can also right click, enable editing, and then actually change the wording in the procedure if you need to. If you believe there are other assertions, you can tick other assertions, and you can then remove enable editing to have it back to that step. Some firms I know prefer to do this by the person doing the planning, but then let the juniors not amend the procedures. So maybe only third years get to do this or something like that. Sometimes only the managers get to change it. That is up to the firm to decide who has the capability, the functionality. And that is done through the groups of staff in access controls for Caseway. But that is the functionality in the work program that is already available. Right. If you wanted to have the even in the planning memorandum, just to show you that also, the planning memorandum we said earlier on is the document where we will document the minutes of the meeting, but just have a look here also where we have the audit plan, which also then reflects for revenue the responses. Okay. There's one thing we still want to see for revenue, and that is to see that these medium ones where there actually aren't any risks, where they disappear. Can you still remember what that was like, how I did that last week? So I'm going to quickly show you in audit plan and strategy 1220. Last week, we went to right to the bottom after having considered all the points. We considered professional skepticism, whether there were any conditions that could impede our professional skepticism, documented how we responded to them, considered conscious or unconscious bias, and then got to our conclusion. We said, first of all, stand back. Did you record a risk for every instance where you identified inherent risk factors, where they were identified? Why did we say that? Because if there are inherent risk factors, we have to record a risk because then we have to get a system description. If not, if it's just a material item, then that's all fine. And we can just then select an assertion for all those material items. And then lastly, do you approve the audit plan and strategy? It's really just to say that whenever you've got assertion with no risks identified and where they're not selected for testing, we will indicate them as no risk, not selected. And that's all good and well. Yes, as soon as I do that, let's see what happens with revenue. With revenue, now no risk, none selected, rather than the medium one that we had earlier. Good. That's been quite a long journey now for us for revenue, having a significant risk where we have the significant risk response, the controls, etc. The next one that I want us to have a look at now is actually for the other financial liabilities. We're going to follow a similar process, much quicker though, because what is different with other financial liabilities? This is our installment sales account. With other financial liabilities, we did not identify any risks of material misstatement, and it is a material balance, so we need to go and identify what is the most likely assertion to be affected in the case of a misstatement, and that will then be our selected assertion. With other financial liabilities, remember when a payment is made, it is effectively saying debit the installment sales debt, debit that, credit the bank, but very often we forget to also then record the interest received, all of those things. So the most likely assertion to be affected is probably the accuracy valuation allocation assertion. So we are going to go and record that. Okay, I'm going to follow the same steps that we did earlier. We're going to go back to 1051. 1051, and we are going to select other financial liabilities. You can see it is active. There is a balance. Okay, we will comment on our analytical review what we find from looking at the last year to this year comparison. You can see it's increased significantly. What type of risk assessment procedures did we do? We did analytical review. We're probably going to do inquiries. You're going to document all of that, similar to what we've done for revenue. You will identify your possible risks of material misstatements, consider unusual accounts. Here we can see review the underlying records for any unusual items, etc. And then we will get to transactions and balances. It's clear that there were new or increases in the other financial liabilities. It's increased drastically, so there must have been new ones. And then to consider whether there are any finance transactions with repayment terms, any decreases or settlements, which may or may not be there, perhaps derivatives, financial instruments designated as hedges, etc. Accounting estimates, perhaps. Let's say none of those are there. Okay? This is a real proper installment sale. There's no accounting estimates or anything like that. That's 1051. We've marked the ones that are relevant. We've documented the consideration for risks of material misstatement. We did not identify any risks. In the top here, we can say we know that they had a new installment sale, whatever the case is, and so we are aware of it. So there's no risk of material misstatement. We know about it. Whatever the case may be. All right, that's 1051. Of course, if you want to record a risk, I almost want to say I'm most happy to encourage people to rather record risks. I met with a firm the other day who are I almost want to say their policy is basically to not record risks other than just the fraud risks that are prescribed. It's not like it's a policy, but almost never. They rather select assertions. I'm cautious of that. I'm saying, can you honestly say that there are no risks here by looking at the analytical review? Is there really nothing that shows you that maybe one of your inherent risk factors are active or actually present? Okay, so that's my little warning. But because I want to now show you a material balance without a risk, let's just go with the flow and pretend there is no risk here and we are comfortable. What we're going to find in 1160 when we get to the risk assessment document, again, go find other financial liabilities. Other financial liabilities, it's not even open for us. The section is active because there's a balance, okay? So it's white. There's no risks recorded. You can always go and record a risk, but we said we don't identify any. The balances are there, no inherent risks recorded, materiality level, and you can then go and document again, having considered, having done the analytical, blah, 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 no risks recorded. That's 1160. Then we say we go back to 1150 to see if we have any system description requirements. What are you telling me? Hang on. First poll we had today was no material balance. I don't need to do a system description. So we haven't recorded a risk. Do I need a system description? Do you see other financial liabilities here? I don't. Well, guess what? It is actually hidden. I'm going to show you now. No, that's cash flow. Sorry. Bank overdraft. Other financial liabilities. So I can enable the section if I desperately want to do, just to make it more obvious for you where it is. You see that one? Okay. But it's actually not active. I'm going to disable it. It's disactivated or deactivated by default because there's no risk recorded in 1160. So we don't need a system description. It is not a significant risk. There's no risk, so there's obviously no significant risk. So we also don't need to identify controls and test implementation thereof. So 1150 has no work effort for me for a material balance without a risk. When we then go to the audit plan and strategy, 1220, I go to my other financial liabilities. Okay, it would have said as a medium 1, but because we've already concluded at the bottom, I see my NRSs. But what does it tell me in red here? Select at least one assertion for this financial statement item. I have to identify one assertion. And we said, well, the most likely one where things could go wrong is probably accuracy, valuation, and allocation. So I'm going to select that one. Gives me a medium 1. And my warning has disappeared. I've selected at least one assertion to perform substantive procedures for. Then it says, did we evaluate all the evidence available to date to conclude, this is our standback, that there really are no inherent risks related to this balance? Yes, that's the only option I have. If I say no, go back and redo it. Okay, again, I can select what may be relevant. The only options I have available are required procedures and further, but because there is no risk, the bare minimum procedures required is probably going to be sufficient. That is then required procedures. Let's go have a look at the work program. Work program 55010. Give it a moment to open up. To run those scripts, to tell it, you now want to have selected assertion work for ABA. So again, it gives me that summary to say there's no risks. You only selected the ABA assertion, and so you will see the required procedures only for ABA. Now, please, this is where you need to go and look carefully and consider whether all of these ABA procedures are relevant or whether one or two of them could be appropriate to address the risk. Material increases may be sensible, perhaps. Inspect all the services, outsourcing, etc. These top ones, of course, are required by the standards, and so you'll always include them. But consider whether any of these could perhaps be hidden, and if they can be hidden, well, then, like we said, right-click, ignore procedure, and hide those procedures. So the fact that they are appearing here does not mean that they always have to be done. It rather means that you can do them, and they are probably relevant to the section, although not always. So it's almost giving you a skeleton to start from rather than just starting from a blank page. All right. And then the last one I want us to see, yes, I've shown you the work program. The last one I want us to look at is 1051's cash flow. So again, a statement of cash flow being then, let's say, our other disclosure item. I could have also used related parties, I guess, but let's see for statement of cash flows. 1051 transactions, types and volumes of transactions. So there's not really a balance to look at from last year to this year. So the only identified possible ROMs is to look at disclosed items, and then to consider items around the transactions and balances, like the method used to report the cash flows is the indirect method. So my work procedures will be adjusted whether it is the indirect or the direct method. But other than that, there's not much. I could, of course, record a risk if I wanted to. That's perfectly fine. Again, let's assume there's no recording. Going to 1160 then. And then we go to statement of cash flows, which is our last item. Statement of cash flows. Here, again, we don't have any risks recorded. Okay, there's no risk of material misstatement because there's no balance. The only assertion that could possibly link to this will be your presentation and disclosure, for which we haven't recorded a risk. And then this question to say, okay, we know there's no balance, so it can't be quantitatively from a value B material, but what about qualitative material? Is the statement of cash flow qualitatively material? And then if we say yes, again, it is just something to note in our audit plan and strategy, in our risk assessment. But what is the impact of this? Well, we know now that once I've got a material item, I need to select an assertion. So still, if I've got no risks recorded, I will still not have any system description requirements in 1150. Just give it a moment to open up 1150. So again, if I go up from my general IT controls, this is where my statement of cash flow was. So let me just enable the section. You can see that's where it is. It was hidden away. I couldn't see it. Okay, so there's no requirements for system descriptions, no requirements for controls because I have not recorded a risk of material misstatement for statement of cash flows. So in this case then, I've got a material disclosure that does not have any risk. In my risk assessment summary, again, it prompts me to say, hang on, you've said this is a material disclosure. It is material qualitatively. Please select an assertion for testing. And now I need to go and test some work here. Required procedures, go back to the work program. Again, did we do the stand back? Yes. Oh, goodness. Yes, we did the stand back. And I'll go to my work program to go and see what procedures are there. All right. So we've looked then at revenue. For revenue, we had the scenario where we had fraud risks, we had significant risk responses, we had control testing, we had a variety of responses. Then we had the other financial liabilities, where we had a material balance with no risks, where we had to select a response for an assertion. And for statement of cash flows, that's one of our other disclosures, where I would have selected material, qualitatively material, and then had to select an assertion. Good. So that is that then. And then to end off the day is to say thank you very much to everyone that participated, everyone that joined the session, everyone that joined the series. Thank you so much for participating. I see a few questions. I'm going to look at them just now. But if there are any of you that need to go off, please have a look out for our evaluation, where we're going to ask you about your experience of the series, of the level of the content, and what you want to learn about next year in the next Get Ahead. But otherwise, I'm going to have a quick look at the questions and respond to those as we go through.